Well, it's a flat morning for the markets. Not much has changed. 11 points higher on the Nifty. So let's just keep it with the corporate conversations. Now, as the economy struggles with several macro headwinds and concerns, the key question for NBFCs is whether rural credit demand is picking up or not, and whether housing is going to come out of the woods. Well, we'll ask that question to Dinanath Dubhashi, MD and CEO at L&T Finance Holdings. Thank you very much, Mr. Dubhashi, for joining us in the studios, and welcome. I believe it is your first time here. Yes. So, I just want to hark back to some of the commentary that we got after your Q2 print as well, where, you were talking about really putting the spotlight on both rural and on housing. Now, in terms of your own revenue pie, the book itself, how much contribution do you envisage from these sectors, and what is the kind of book that you plan to see in the next 12 months?
Sure. So, we started about 3 years back from our infra book being 2/3 of the book, and rural housing about 1/3. And that time we had guided that we will move towards retailization. And now we have moved to sort of 25, around 26 housing and rural. So we have moved to 52%. So now majority is housing and rural, and about 41% infra. And the rest 5-6% is the corporate portfolio, which we have put on sort of rundown, and we have been running down. So the retailization has happened pretty well.
So on housing, some more color. Is some of this loan against property, or is it only to sort of, actual end usage borrowers? What kind of a housing?
So housing, it is sort of 50-50 between developer funding and retail home loans. So the loan against property also we have been reducing, not as a strategy, but as we see the SME sector struggling, not too many loans fall within our risk return criteria. We don't believe at this point of time risk is priced well in the LAP market or the SME market, and hence we have been concentrating the retail home loans, concentrating more on salaried, more on direct sourcing through our developer contacts, using group strengths, group synergies, both for doing developer loans and for retail. So being L&T is of great advantage in housing.
Yeah, okay, let's come to that. Actually, today morning we started our conversation with Mr. Jenna, the treasurer at SBI, and he was speaking to us about how borrowing rates have crashed but only PSUs and very, very top-rated, AAA companies, people borrowing at repo rate, he said, for shorter-term paper. How has your cost of borrowing moved from, say, March 30th to today?
Okay. So there are two angles to this. He is right, costs of short-term paper, and if you see the yield curve now, yield curve is very steep. So at the shorter end, the rates have really
4.9, he said.
Really crashed. And at the longer end, a 5-year or a 7-10-year papers are not, in fact, the spreads are quite high across the board. I'm just making a comment across the board. There are a few trends that you see in the market. The flight to quality is very high. So AAA NBFCs belonging to big corporate groups are getting money, the rest are not getting money. That's what, and that is why we have gone for extra ratings. We were gone to more credit rating agencies, went to CRISIL. We'll perhaps go for an international rating now, most probably. So, establishing yourself as a strong company has a premium. In the market. So that is clear. Second thing what we need to see the beginning and the genesis of this whole crisis. The genesis of the whole crisis has been using a lot of short-term money to fund long-term assets. And I wish and hope that the sector doesn't fall for it once again just because cheap short-term money is available. So if you see us, we have used our CP in the overall book from about 16-17% to 10-11%. Even though our cash flows support it, it is always good policy. And to answer your specific question, as a mix of all this, our cost of funds overall has risen by about 30 basis points in 1 year period. From March maybe by about 15 basis points, but if you say last October to October, about 30 basis points. We have been able to pass it on, that's a different story. But this increase has been a mix of reduction of rates and moving more to long-term, diversifying funds. We have gone for retail, we have gone for ECBs, this kind of mix, and I would see good NBFCs distinguishing themselves in the market by diversifying the liability side further.
But is there any chance of the cost of funds coming down, considering rates are so low and the market seems to be easing up now?
I would think so. It won't be, for prudent NBFCs, it won't be as dramatic as this big fall in short term, because short term should form a very small percentage of the overall borrowing. But yes, the trend definitely should be downwards. At the time of the results, I had guided that by March we may see further 15-20 basis points rise in the interest rates. That looks a little bit pessimistic now. I mean,
so we won't have a rise.
I don't think there will be a rise at this point of time.
You may borrow at the same cost, you think?
Probably. I mean, even going more long term, even borrowing more bonds, even we may plan for international rating and international bonds issue. With all that, cost of funds may still remain the
flat. What is the cost though, average cost?
We are at 8.5, 8.4, 8.41. Right?
Okay. AUM, when you last reported at the end of September 30, was 1 lakh crore.
That's right.
Where do you see that?
Okay, so that's interesting. What we have, we are just taking a step back. What are the three things which have troubled the sector? One is liquidity, second is asset quality, third is lack of growth.
Yes.
So we have talked about liquidity.
Yes.
Asset quality, it is important that a strong player is not only does credit well, is also able to control outcomes.
Yes, of course.
And let's take the example of ILFS, where there was a problem and our company could make sure that most of our borrowing companies became green and get money back. So with this, what we have done is types of businesses like balance sheet lending, where we can't control outcomes, we have put them on rundown.
Okay.
Now this has several advantages. One is that yes, we are more in control of our book and asset quality. Second, growth is not a pressure anymore, because our focus book has grown by around 20% YOY, whereas the defocus book we have been able to reduce by 40% YOY, and hence the overall book growth is just about 7 to 10%. Right. So while the overall book growth is just 10%, the quality of book substantially improves. In current situation, not having a big growth and hence not needing too much funds and too much capital is a good thing.
So you would be what, 1,05,000 crore, or
by the end
would you
of
be
the
1
year?
lakh?
Yeah, by the end of the year around that, and with the composition changing majorly, we are about 9,000 crores of this defocus book at the beginning of the year. We finished second quarter at 7,000. We should be 5,000 or below by the end of the year. So the composition changing, and overall specifically yes, around 105 or so looks reasonable.
So the other thing is that in the second quarter we saw a slight increase in bad loans on the gross NPA number. Was that a one-off? Where did that come from? And I'm going back to the housing question, the part of your book which is developer financing. Are there any issues there? Are there any delays there that you're facing?
So delays most certainly. So I will just tell you where it came from is one-off, absolutely. In fact, if you look at the sector as such and touch wood, I believe the slippages have actually stopped now. You know, the sector saw huge amount of slippages in the last 12 months.
This you're saying housing?
No, generally.
Oh, generally, in corporate sector.
Corporate, there were a number of names. I don't want to take names on a show, but you know the names. There were a number of names, not only in our portfolio, but generally in the, which has stopped. So we don't see new slippages coming. Resolutions, it depends, right, on which sector you are in, how much you can control resolutions. As far as housing is concerned, most definitely the system is in stress. We are seeing some good things happening, government starting the AIF. We expect a few more good things to happen, like, you know, a single flat owner perhaps not able to take the builder to NCLT or a one-time restructuring. We are expecting these things. We also see certain builders who have the right structure, that is, you know, 2-bedroom flats or a 1-bedroom flat, the momentum starting, the inventory, even large, it is still large, but it is 33 months vis-a-vis 41 months a year back. So if you are in the sector and if you are seeing early moves, the early moves are good, provided your portfolio is good, provided you are lent properly, provided you are lent for construction finance and not on the balance sheet, not for private equity, etc. And most importantly, very simple thing is there will be problems, and then you should have the ability to solve the problems, which we believe, for the lack of time I won't go into details, but I would believe that being L&T we have a better capability of solving some of them.
For lack of time, can you please give me just monosyllabic answers? What may be your gross NPA by the end of the year?
We don't see it shifting too much upwards from this point of view.
Okay, it stood at around 6%, 5.98.
We would see the same level.
It's peaked off
Same
there.
kind of level.
Okay, and the other thing, you all sold your L&T Capital Markets unit. Are there any more non-core or any other businesses that you will sell this year?
No, sir, I don't see.
When does the money from that deal come in?
We hope this quarter. The deal is signed. It is awaiting government permissions. So to that extent, I can't predict it. But once the government permissions come in, the money will.
Okay, we're being warned that we are out of time. Thank you very much, Dinanath, Dubhashi, for joining us with a wealth of details on your sector and on the company itself. We wind down on Bazaar with the note that all the indices are in the green, but just by a smidge. So you will have a lot of trading ideas coming up on Chartbusters. We will leave you with the 3-year financial performance of L&T Finance. First up, that's the AUM. As Mr. Dubhashi was pointing out, it's kind of flattening out by design at this point in time. That was the previous year's AUM. Now it's at 1 lakh crore. Profit after tax, that's the way it grew over the last 3 years. FY19 a strong year, and that's the valuation picture as of now. Price to book for L&T Finance. Thank you very much for joining us on Bazaar, and do stay tuned in for Chartbusters.